Tonight, our in-depth coverage turns to the stock market. Now, over the last couple of weeks, you've heard a lot on this station about tariffs and the stock market having some wild up and down days. But what does this really mean for you and me and our ability to go to work and feed our families and pay our bills? Joining me tonight, unedited, to talk about this is BOK Financial Chief Investment Strategist Steve Wyatt. Now, we do want to note this interview was shot on Friday, so there will at times be, he will say this week. That means last week. Steve, I know we've all been watching these volatile days, but and you work with these markets and have been giving economic projections for years, but I do wonder how much of the stock market is a reflection of the economy itself and where we're headed and where we're going.
Yeah, that's a great point, Rick. I mean, look, over time, the stock market's a really good discounter of what we expect out of the economy. But when we have these turning points, and I would just have to call the tariff announcement in the Rose Garden a week ago last Wednesday, a turning point from the outlook of what we could expect from the economy. And because of the level of the uncertainty and the idea that the tariffs we were ready for some tariffs. We've been talking about them for a long time. But the level of tariffs that were announced was so much higher than what we were expecting that it caused a big high level of uncertainty on what does this mean for economic growth going forward. And generally, as uncertainty goes up, that just means people think, well, it's going to be worth less than what I thought before this announcement came. So stocks have been very volatile as we try to figure out what this is going to mean to growth. Obviously, this week we saw when the tariffs, some of the reciprocal tariffs were paused, caused a huge, the best day in the S&P 500 in 16 years. But we've had about a 15% range on the S&P 500 this year. That's $6 trillion in market value between the high and the low. The value of our economy and the companies that operate in it don't change that much in a week. So what I'm getting at is in the short run, the market can trade in a very emotional fashion. And so as much of what we're seeing this week is emotional as an attempt to effectively discount what we're seeing from a growth standpoint going forward.
Should I be scared of all the volatility?
I don't think scared is the right word. And look, I would say this, Rick, there's nothing that's happening in the market from here that at this time that is that much different than what we've seen in the past. So any good investment plan is going to take into account that stocks move in price up and down. They can be volatile and be very volatile over periods of time. So this isn't a scenario where you're going to be scared. I will say this, Rick, the reason that the president changed course this week and paused some of the reciprocal tariffs was because of problems in the bond market. We did start to see interest rates act in a different manner than what we would have thought. Long-term interest rates started to move up. There were some signs in the short-term market that there might be some difficulties in liquidity shaping up. That's what caused the president to shift. It wasn't the fact that stocks were down. It was the bond market that led the president to change his course. We do have to be aware of this. It is possible that if we push hard enough, we could break something in the market. We don't want that to happen. So I was glad the president paid attention to that. But again, this volatility that we're seeing isn't something that I would say we need to make a fundamental shift to whatever your investment plan is. We don't need to make a big shift in what our risk tolerance profile is. The best advice we can still give, stay diversified. A broadly diversified balanced account is not going to be down nearly as much as what the S&P 500 is. So stay with that plan, stay diversified, and continue to think about the longer term. We're going to get through this, Rick. The news flow could change pretty quickly. Right now, it's all tariffs. Sometime over the next week, 2 weeks, 3 weeks, we're going to start hearing from Congress about changes in tax policy, tax cuts, both for individuals, businesses as well. We're going to hear about reductions in regulatory issues that could make it easier for companies to get stuff done. There's going to be a shift in the news flow. We may get a couple of big countries that we're negotiating with now come to an agreement with President Trump on tariffs that give us a blueprint for how other countries could act on a go-forward basis. So the news flow is really negative right now, but it isn't always going to stay this negative.
I was going to ask, do you think we're going to be having another week like what we are just experienced in 90 days?
So, Rick, I would say this: do not ask me for clarity on what President Trump might do in the next week. I don't know. I don't think anybody knows. What we can hope for is that the tariff scenario continues to improve over time. Look, China is a separate issue, Rick. We're now looking at what 154% tariff on imports from China. They're tariffing our imports to China in a similar amount. It's got to the point where this is now it's not realistic that that's going to be sustainable for a longer period going forward. But as we think about the bigger picture, let's hope that as we now move through this process, cooler heads can prevail from what we're really trying to accomplish here, which is to make the U.S. economy a little more resilient than it's been in the past. That's not a bad goal. There are some things we need to change to get there, but we certainly have some work to do.
I do have some older viewers who obviously they check their 401ks a lot. Is this a time to consider delaying retirement, possibly?
Well, I'm 65, so let's put myself. I'll just answer for myself in that. Look, here's where having the plan going into this is so important, because as we approach retirement, we should be reducing the risk in our portfolio. And I'm going to define risk as equities. That's where the primary risk of our investment portfolios comes from. So to the degree that we've been doing that, we're talking about shifts, changes in account values of 1 or 2%. Not a huge issue. It may be that this, as we get older towards retirement, we need to review how much risk we have in our portfolios. So if I've gotten myself where I had too much risk and I've taken a big hit, yeah, this might mean we have to work an extra year or two. But this is why we manage risk. Risk management is so important, even when the markets are doing well.
What does all of this mean for the oil and gas industry in Oklahoma? We've seen the price, even if it didn't stay there, it still went to some of its lowest levels in years.
Yeah, so this is less about tariffs, although, look, a lot of the equipment, the steel that we get for the energy business is imported. There are some portions of the energy business that are impacted by tariffs. What's more going on in the energy business, though, is this is about reduced demand as we move forward, because economic growth, not just in the U.S., but globally, is going to slow. We don't know the exact impact of all of the tariffs and what that's going to mean from inflation. We got inflation numbers this week, by the way, that were great, absent the tariffs. The CPI and the PPI report would probably have us talking about the Fed lowering interest rates in May. Tariffs are going to have a short-term impact on inflation, but in the energy markets, this is about an outlook for lower growth. Lower growth means less demand. Less demand means lower prices. We have a stated goal to increase production domestically to become more energy independent, but lower prices of the commodity are going to be a headwind to oil companies investing more. So we're in an interesting position. And by the way, just last week, OPEC announced that they're going to increase production on a global basis. I think they're adding like 425,000 barrels a day. I would be very surprised if some of that was not coordinated with the White House. Part of the way President Trump is thinking about offsetting the cost of tariffs for consumers is lower energy costs. And so as oil prices come down, that will be a benefit for consumers. Unfortunately, a lot of that's going to be eaten up by higher costs caused by the tariffs, at least in the short run.
Steve, is there anything else you'd like to mention? I'm running out of time here.
Yeah, Rick, I'm sorry. Look, it is a very volatile period. I would encourage investors, stay with your plan. If you don't have a plan, get a plan. This is not the time to sell everything and think you want to just stay in cash. We're going to get through this. The news flow is going to get better. There's a path forward for us where this can be a really good thing for the U.S. economy as we think over the next 3 to 5 years. We remain optimistic on the longer term prospects for our economy.
So let me ask you just a quick follow-up real quick. Is this a good time to buy some stocks?
It can be. Look, I don't want to get caught in saying, hey, we're at a bottom and this is absolutely, don't mortgage the house to buy stocks. That's not what I'm saying. But to the degree that stock prices have come down and built in a lot of bad news, it's not a bad time to think about making some investment and with the opportunity that as the news flow improves, you should see a better environment, a better tone, a better environment in the stock market for prices to improve from here.
Steve, thank you so much. I appreciate it.